The macro picture for crypto is quite confusing now. There are some signals that scream that we should be buying now. And then there are other signals, especially cycle related signals, that say that there's still potentially more downside. Now, I try to be as objective as possible on this channel, and so I want to talk about both potential arguments. Everything, of course, supported with data. What we've got over here is the dominance of the altcoin market. So we look at the market cap of the altcoins that are not in the top 10, and we take this as a fraction of all of crypto. And it seems like there's somewhat of a trading range, with long-term seeing more and more adoption for altcoins. Based on this chart, we are very depressed on the altcoins right now. And based on this, the smaller altcoins could outperform the rest of crypto by potentially more than 100%. If I have a look at this chart, this is the stablecoin dominance. So there are two major types of asset classes in crypto, right? There are the risk on assets that fluctuate up and down, and then there are the stable coins. If people are very scared, if people are rather cautious, then they move from the risk on volatile stuff to the not so risk on stablecoin. And so the higher this graph is, the more spooked the market is. The more money is currently in stablecoins. And this peaked at 19% in 2022, and it bottomed in March of 2024 at 5%. And since 2024, we are in a somewhat tighter trading range. And so medium term, again, one can make the argument that we are rather high on the stablecoin dominance, and that all of that stablecoin money could get deployed. When the stablecoin dominance is going down, that means that crypto prices are going up. So that's one side of the coin, right? The market is already pretty much risk off. There is some money on the sidelines that could get deployed, and historically we did see a turnaround at the current level. But then there's the other side. What we've got over here is the Solana price relative to the Bitcoin price. And during a bear market, Solana underperformed Bitcoin by 86%. The downside is absolutely massive. And so far, since the beginning of the year, we have only seen 40% underperformance. From the current price to a potential bottom, we could see Solana underperform Bitcoin by another 75%. Solana was, of course, one of the best performing altcoins during this cycle because of all the meme coin trading, because of the Pump.fun ecosystem, that launchpad for meme coins. The trading on Pump.fun is declining still, unfortunately. And with less usage on-chain, the token of Solana itself might continue to deflate more. Currently, the momentum isn't that positive. Or here's another marker that tells us to be rather cautious. This is the Bitcoin realized price. So sometimes the current price is below the realized price, that's the orange line, sometimes it's above. Whenever we are below, it's historically a very good time to buy. Now, why is that? The realized price is nothing else but the average cost basis of the market, so the reference price of the market, right? The current price is simply just the cross of demand and supply right now. But when we look at all of the Bitcoin that have ever moved, and we look at what price did the Bitcoin move, then we get the realized price. We get the average cost basis. So when people look into their portfolios right now, into their Bitcoin portfolio, then at the moment, most people are still in profit. The average cost basis is $43,000. We are not historically low. We were historically low after the FTX collapse when Bitcoin was at 20K, or after the miner collapse when the ICO bubble burst, or here during COVID, or here at the end after the Silk Road and Mt. Gox collapse. We don't see these buying opportunities very often, only every 3 to 4 years. We are not there right now. We can take it a step further. What we've got over here is the market value to realized value Z-score. So what we're doing here is we look at how much is the market in profit, and we put that profit in relationship to the volatility of Bitcoin, right? In the early days, Bitcoin was super volatile. It went up and down a lot. Nowadays, it's bigger, it's not that volatile, it fluctuates a bit less, and so we can justify less of a profit as well. We look at the current profit of the market relative to the volatility. Is it very high? Is it very low? And this seems to top out at similar levels, right? When the market is a lot in profit relative to its volatility, it's time to exit. And whenever the market in aggregate is in losses, right, when we are in this green area, it's time to enter. And of course, we are not there right now. We can even be a bit more pessimistic. Instead of looking at the realized price of all holders, we can just look at the long-term holders. And historically, we still hit that price level with every bear market. We didn't necessarily hit it during the COVID crash, but for all those other moments we did. And here the bottom is at 25.7K. This is very, very depressing, right? This is not necessarily what we want to see. Now, I've got the impression that the 95K mark, $95,000 for Bitcoin, is very important. If we can go above, we might continue the bull market. If we don't, then probably we're going further down. Let me show you why I think 95 is so important. Have a look at this. This is the supply distribution of Bitcoin. So at what price did Bitcoin move the last time? And a lot of people have their reference price at around 60K. So those are the long-term holders that are currently in profit. But then there are also a lot of short-term holders that are currently in losses that bought Bitcoin at around 95K. What I believe might happen if Bitcoin suddenly starts going up is that a lot of short-term holders that are currently in losses might just close their position. Because let's say you bought for this high price and you were hoping for 200K and this didn't happen, we went down. Then probably all you want at that point in time is just to get your money back. So if you get back to your entry price, you might just exit, you might just sell. If a lot of short-term holders have their reference price at 95K and the selling pressure by those short-term holders can then stop the medium-term positive momentum, then we've got a problem. Here's another hint for the same price level. This is the 120-day simple moving average. It's historically the best moving average, and that as well is at 95K. We should be buying whenever the price is above the moving average. We should sell whenever the price is below the moving average. I've talked about this several times on this channel, but here's a back test of all the moving averages up to the 200-day. So it goes all the way from 1 day, so just look at yesterday's price, to 200 days moving average. Buying and holding during the time would have brought us 28% per annum, and this is the annualized performance. So the 120-day simple moving average historically worked the best, but in general, moving averages tend to work for Bitcoin as long as they are longer than 30 days. I know this was very quick, but I don't want to go through this every time in too much detail. Simply just believe me or continue watching videos on this channel. I backtested all of those moving averages. The 120-day is the best, and currently that moving average is at $95,000. If we stay below $95,000, we're likely going to continue the bear market. At least that's what the backtest says, right? This is how well the backtest works. So at the bottom, we see the Bitcoin price, and in turquoise, we see the result of the backtest. So that started in 2018 with $10,000. Here's the same thing on a logarithmic scale, right? We can see how constantly we are appreciating using the 120-day SMA. So we are shorting whenever the price is below the moving average. So that's why this is going up when we crash, and we're going long whenever the price is above the moving average. Short over here, long over here. Yes, altcoins are depressed, and yes, the market in aggregate is very fearful, but probably for a reason. When we look at Bitcoin's price long term, right, we just draw some randomly curved lines here, but that interestingly enough connect the peaks and the bottoms very, very well. This encompasses the price movements incredibly well. We see that the current risk to the potential reward favors to rather be risk off. There is the real chance that we've just entered the bear market and that we could see a similar retracement that we encountered in 2022. And that would bring us to $27,000 in Bitcoin. Not very far off from the long-term holder average cost basis. And so the way I look at this is that short-term there might be a rally because there is a lot of capital on the sidelines that's ready to be deployed upon positive news. Long term, however, there is a lot of downside as well. So whatever purchase is now done has to be hedged. I don't think that it makes sense to now bet the farm on everything. I think there's simply too much risk in the market. I'm personally rather risk off. I'm currently actually betting on falling prices. I think that our community, right, the Bitcoin strategy community, is one of the very few crypto communities that actually made money during this recent down move. We shorted altcoins since we hit 100K in Bitcoin. I've shared all my shorts also in the premium membership of this channel. And so if you want to know more about my strategy, feel free to check it out. It's down below. It's thebitcoinstrategy.com. There's also a money back guarantee. So in case you don't like premium, just message me within the first 7 days and I'll refund you 100%. Looking forward to seeing you on premium or potentially here again on YouTube. Feel free to subscribe. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.